money flowing into gold from institutional money. The dollar story has sort of lost some of its key points. That's at least my take on gold right now. Could you be bullish, or are you only looking for bearish setups? What do you think? This is our retail positioning indicator on the Edge Finder. In terms of the euro specifically, we're actually getting pretty mixed sentiment from retail traders. You had a bearish kind of move in oil, the Nikkei, South African Rand, silver, Bitcoin. For me, it's like I've got to see a breakout one way or the other on gold. Are we going to get the break of 2005, or are we going to start seeing 1980 fall apart, which has been this stronghold for gold here recently on the downside? And like I said, 2005. Every time we pump into the 2000s, it seems like gold rejects that area. So I'll go to Frank first, and then I'll come to Ivan. Frank, what do you think about gold right now, either fundamentally or technically? What are you looking at with it?
I'm looking technically, just because despite like its run up and what's going on in the Middle East, I can't bring in like my hopes for how things turn out. It's just looking directly on the chart is I guess just a wedge pattern here after a long break to the upside. So it's at a decision point. It's got to make its move. Right now, I guess it could go either way. I'm not really looking at gold to the long side or the short side. I'm just kind of seeing where it goes. But yeah, I'm not no huge opinion on gold right now.
Okay, fair enough. So it's kind of still range bound, stuck in this spot. Ivan, what do you think? Gold, bullish, bearish? What do you think?
I think that if it breaks 1970, it would be a very good thing to the downside. Yeah, okay. That's kind of a thing I think about, because the velocity was too high. But yeah.
Gotcha. So 1970, this thing is run really hot. So what do you think? I mean, the dollar story has sort of lost some of its key points. That's at least my take on gold right now. With the Fed softening its tone, jobs numbers coming out, and markets seeing what they wanted to see there. What do you think about
CPI next week?
Yeah, we do have CPI next week. So what do you think? I mean, we're in this range bound. Could you be bullish, or are you only looking for bearish setups? What do you think?
I'm going to go back to what I mentioned in a meeting earlier today, actually. I mentioned a meeting on euro dollar back in September. I said that euro dollar was too low to sell. This one is too high to buy. You are on the wrong end of the trend, of at least the beginning of it. And the higher it goes, the more premium you have to pay to be able to make the money that you want to make, and the risk is higher and everything. So it's kind of like it's a deadliest catch. If you try to buy it now, in my eyes, I would argue that you are forcing FOMO. And
yeah. So you mentioned the euro there, and again, another chart I want to ask both of you guys about. The euro has been just beaten down for like several months. I agree with you there, Ivan. I think that if you're looking at the euro, whether you're a bull or you're a bear, this is one of those tough times for me, at least in terms of what do you do, right? Because if you're someone who trades the euro, if you're bullish, it's already made the move. And if you're bearish, you're kind of fighting what seems to be on the daily chart an impressive breakout. I guess if you're longer term bearish, that might be a different story, but you've had this break of structure. Again, we'll go around the room. I'll go with Frank first. Do you think the euro has more upside here?
I do. I think that because of the indices, and also, we've seen big breakouts on both ends from the euro and the S&P. So what we're seeing here is just a break in a long-term downward trend line. Euro, the same thing you've said. There's just these highs right here, prices breaking, forming higher highs. And overall, because of what we saw last week, the Fed is just not looking as hawkish as we anticipated. And there's nothing this week that I think will change that unless Powell on Wednesday and Thursday just says something completely different, which he most likely won't. He's never really gone back and forth, and he's just always been very clear. So I think the bias is turning towards the euro against the dollar, and also turning towards the indices as well.
I think one thing to add to that before we go to Ivan on that is, you know, part of it is I'm not necessarily advocating for like, oh, the euro just looks incredibly attractive. I think that, you know, it's similar to the stock market. Frank, you made this point. Sentiment on the euro for currency traders has been the very, very crowded trade to be short euro USD. Maybe not so much as of recently, but for a lot of this time, you know, it's just been the easy play in the currency world to be more bearish on the euro because of a slowing economy compared to that US dollar stronghold. So I'm not necessarily saying, oh, the euro is just rosy and rainbows. I'm saying that I think that when you get the shift back even just a little bit, it doesn't take much to really start something to happen on the price action side. Same thing with the S&P, right? Sentiment was super bearish, and we had a couple things that hit right, and boom, there it goes. You know, S&P 500 up several percent in a single week. So just thought that was worth mentioning in terms of euro sentiment. But Ivan, do you agree or disagree? I mean, euro, is it starting a new trend to the upside?
Chandler, if you put my chart on.
There we go.
You know, my pivot points, you know, monthly target 107.50. As Aldhuff says, I took a trade on the FOMC. This is 6 pips. I'm like, cool, I held it. So if you did hold it, you should, I don't know if you should consider, you know, that might be the high. And the thing that I'm saying, the joker that you are actually looking for, Frank, is CPI next week. That's going to be the determining factor if it's going to go dollar bullish continuously or go back into dollar bullishness again. Because I would say that market has become, well, they have agreed apparently all of a sudden with the Fed, which I would call a bit delulu, because the CPI is still rising. It's still above 3%. So if you say we want to pause, okay, we can pause. But for how long is that CPI going to continue to rise? How long is that going to rise? And you're still going to sit there and be like, well, we are still going to pause. Because that was the sentiment how many weeks ago? It wasn't too many weeks ago. It was just before Fed. That was, oh, we have higher inflation. We should probably rise. And it's probably a relief rally more than anything else. So I've seen the ball out has been said he has sold it. I think that's a bit early to consider selling. But I would at least want the CPI to increase next week to be able to say that go back to dollar bullishness again.
Yeah, and that's a good point. And we also had another good point in the audience just now from Dexter, who points out that the idea of the ECB cutting rates before the Fed will cap any significant gains, which I think is not necessarily wrong thinking, Dexter, because again, you look at the two central banks, they're in two kind of different I guess rotations. However, I still think that squeeze, that short squeeze of kind of changing sentiment could last for a little while. And as traders, lasting for a little while is all we need to potentially keep some short-term momentum to the upside for the trade. At the end of the day, if you're trading that shift back, again, to Ivan's point, monthly target idea of perhaps this is getting a little bit overbought in the short term, that's a different topic, right? Than just if you're bullish, and it doesn't necessarily mean buy it at this second, but short term, it could have a little bit more upside. I want to show you another chart here. This is our retail positioning indicator on the Edge Finder. And what we can see here is that in terms of the euro specifically, we're actually getting pretty mixed sentiment from retail traders. So 46 to 54. So retail traders kind of just in the middle. Some of the more extreme readings for people who do care about this stuff. Retail traders are very much long on dollar Swiss. They're very much long, well, pretty long on things like the Australian dollar, and they're shorting still the USD JPY. So for those of you guys who are interested in that, there is your update on that. And then the next thing I wanted to just go over is real quick, the COT data. So for those of you guys who watch the show for the COT data, here is kind of the latest on this. And while we're on the topic, here's the euro. We saw a slight increase in euro bullishness from institutional money. And then you take a look at the dollar, you had a slight bearish lean in terms of institutional money. Australian dollar saw a big bump. The yen saw a little bit of a bump. Gold saw a bump. And what I mean by bump is bullishness, right? Money flowing into gold from institutional money. Same thing with the NASDAQ. And on the flip side, you had a bearish kind of move in oil, the Nikkei, South African Rand, silver, Bitcoin, Swiss franc. So worth mentioning. And again, this is sort of your overall positioning. On a longer term basis, you can still see the Japanese yen, the Australian dollar, the Canadian dollar on the bearish side, the US dollar, oil, and gold still on that bullish side. Now, this is their net positioning. If you guys would like access to this data for our Black Friday sale, as I mentioned earlier, it is currently 45% off. All of our market data, our software here at A1 Trading that we build is currently 45% off for Black Friday. You can shoot us a message using the link that's in the chat right now. Do not miss out on that. Like I said, it is the best sale price of the entire year. Send us that direct message, chat with someone on our team. And also, by the way, if you do get access to the Discord group, you'll also get access to Ivan's coaching webinars, where he does coaching webinars throughout the week. Inside of the Discord, again, you get the trade alerts, but you also get access to the VIP webinars, which Ivan does a wonderful job going through and answering people's questions. Again, back to our topic here a little bit with the currency side of things, the euro, the pound, the dollar. Frank, in terms of trades or ideas for this week, is there anything that sticks out to you beyond just what we talked about so far?
Just basically risk on pairs now. Just seeing the flip in AU, GU. I keep having my S&P chart pulled up because I just wanted to talk about how there was COT data, but I guess we can go back to that. So I want to look at risk on pairs now, and depending on where price ends up today on a lot of these things, like I may be looking to buy, just because we have a whole week of this same sentiment, and I know we have inflation news and whatnot coming out next week, but there's something that I also wanted to look at was just the overall trend in things regarding inflation. So core CPI, we've seen come down substantially since 2022 and 21. Month over month, you have these like little pockets of rising CPI, but overall still lower from where we were initially. And the same thing on the year over year. What we're looking at is maybe some sticky inflation levels, but what it looks like is the trend is overall down. And I think this is what Powell is talking about when he says it depends on the data. Like, we keep rates where they are, we'll see where inflation goes. So unless we see some crazy turn of events and we're coming back above 5% or whatever, I think what he's going to do is just hold off and keep that idea open for a rate hike. But as of now, we're just looking at slower inflation. Even if it's growing or ticking up, it's very slight versus this overall downtrend. So yeah, as long as we have this and the sentiment this week, I'll be looking at risk on pairs for the long side.
Okay, fair enough. And Ivan, same question to you in terms of things we haven't talked about yet. I guess yen pairs. Do you have any thoughts on the yen pairs right now?
Was that a question about what we haven't talked about yet? I have a lot of things to say about what you haven't talked about yet. The one that is the news schedule for the
take it away, whatever you'd like to.
The mentorship meetings are now 7 a.m. New York time, Monday and Tuesday, because that's what people wanted apparently. So it's just before you on Monday. Happened already today. Was 18 people present, so it was pretty good meeting. Got some good feedback. The other one was my insurance company just sent me an email to tell you to check your fire extinguisher and your smoke alarm for the batteries to make sure that going into winter season and Christmas and everything. Other than that, I'm just looking for pullbacks on yen pairs. We are too high. It has gone too much, so I'm just waiting and chilling at lower prices.
And as Frank mentioned about risk on currencies specifically, you've got the Australian dollar, Japanese yen. For those of you guys who are not familiar with that term risk on, risk off, generally speaking, risk on is going to be related to things that are more risk exposed. Obviously, stocks fit into that category. Some of the currencies that are lesser established, like emerging markets, and then you of course have the Australian dollar, perhaps the Canadian dollar and the pound fit into that category roughly, and that's in comparison to things like the Japanese yen and the US dollar, which are these like super kind of safe haven currencies. So you have Australian dollar, Japanese yen, Ivan pulled up. In terms of yen pairs, would you be looking for more risk on focused variations of the yen crosses, or what do you think?
Yeah, so my general theory for the yen pairs is to come down. I would call it maybe a bit considerably though, but I am a bit annoyed at myself or the market or whoever it is. I don't know who I want to be annoyed at for going so fast up. And the quicker we go up, the quicker we come down. So I'm a bit, I'm going to say worried, but it doesn't fit my criteria that we're going to go this fast up. So I cannot buy this high. If I do that, I'm going to break all the rules in my book, and I'm going to lose money. So right now, I'm just trying to protect whatever I have.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.
money flowing into gold from institutional money. The dollar story has sort of lost some of its key points. That's at least my take on gold right now. With the Fed softening its tone, jobs numbers coming out, and markets seeing what they wanted to see there. Could you be bullish, or are you only looking for bearish setups? What do you think? This is our retail positioning indicator on the Edge Finder. In terms of the euro specifically, we're actually getting pretty mixed sentiment from retail traders. You had a bearish kind of move in oil, the Nikkei, South African Rand, silver, Bitcoin,